Hello, everybody. This is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net coming to you with the May 26th stock market wrap-up for you to use on May 27th. Let's go ahead and start off with the Dow Jones Industrial Average. Look at the big cap indexes first. See a very bullish day today. Bounced within almost down to the 50-day moving average. Found nice support recently here at the lows of around 8270, 8268, all around that area. Finds it again at 8275 this morning. Rallies to 8473, up 2.37%. Volume higher than the day before. The only kind of negative is that volume is below the 50-day volume average. Overall, bullish. Still trapped in between the 50 to 200-day moving average. Like I said, it's almost like a Bollinger Band kind of squeeze area. The 50-day moving average should be tightening up with the 200-day moving average. If things are going to work out right, the price will be breaking out above the 200-day moving average. The 50-day moving average will be moving back up above the 200-day moving average, and that cross point should be extremely strong support. The Dow Jones Industrial Average should not be going back below that, or else the bullish bias will be gone. But right now, I went from 50 shorts in March, early March, to where now I only have 4 shorts that I remain holding. They all have gains, but they're all very close to being fully let go. Very, very close. And we had 9 coming into today, so 5 were full covers. So that kind of tells you what kind of market we're in right now. Very bullish. Then we have the New York Stock Exchange. Same thing. 250-day moving average squeezing the price. Bounced today off recent support in an uptrend line. Let me show you. Let me go all the way out on these. Press D. Just connect it below these lows right here. 1, 2, 3, 4 connections for a bottom, 5. So it makes a very good uptrend line. And as you can see, held the uptrend line today. Did not break below it. And it looks like it was able to clip slightly above the 200-day moving average. But to be honest with you, it's probably right on it. That's what it looks like. And until it breaks out. So you got the 50-day moving average below this uptrend line. But now, not only is the 50 and 200-day moving average converging, the uptrend line and the 200-day moving average is now converging on price. So it's here at its apex, and it looks like it wants to break out to the upside of the apex. We will see if that happens or if that does not happen. But then NYSE, very bullish, volume bigger than the day before once again, however, below average. So some good mixed with some bad. Overall, good. NASDAQ, the index I follow the most, up 3.45% today. You can look at the relative strength line below and see that it had a very strong day. Had a very, very bullish session overall. Money stream line and relative strength line both ticked up. Overall, very bullish. Open at 1677.72. 1677.54 was the LOD. 1750.43 is the close. 1751.47 is the HOD. I tell you what, to get an open and low that close together on a big index like that is very sweet. Look at this bullish candlestick pattern today. Compare it to any candlestick pattern before it in this little screen. And then in this one, you have one down here. And the last time you saw this engulfing pattern, we had a rally. And then the last time, now we're having another engulfing pattern. We're engulfing the intraday range. Not the full intraday. Yeah, we are. 1677 LOD on this day. 1677. So we are engulfing it. So it's a complete, fully engulfing range of the past 2-day session. So the past 2 days were negative. Then you have today, over the past 3 days, up 1.31%. Very bullish. Once again, volume was higher than the day before. Accumulation, but it's not above the 50-day volume average, so it wasn't powerful. But despite that, look at these numbers. 46 in the 10K, 95 in the 100K, 142 in my 200, my BOP, and another BOP scan I have. 76 and another one 36. The short scans only have 3, 4, 4, and 3. Perfect speculator 170 stocks to go through. This is bullish. So we're starting to get the very, very big expansion in the number of stocks that are in our watch list that are meeting my minimum criteria of having the price above the 50-day moving average and the 50-day moving average above the 200-day moving average. Historically, the best stock runs that have the biggest run-ups, the best run-ups, the biggest gains, and the safest run-ups. So not only are they your largest run-ups, they're the least volatile, and they're the safest with a lower fail rate once you have price over the 50-day moving average and 50-day moving average over 200-day moving average. I'm still rating for my perfect setups where I've max green BOP for the past 2 to 3 months, huge accumulation and almost no distribution. Some of these Chinese stocks like would be like a case like CAEI. This is way too early right now, but as you can see, it's got a very beautiful move off the low. Very great start beginning. Look at all the huge accumulation and then all that max green bop. That's what I like to see. And like ENTU is another one. Look at all the recent very strong accumulation, all the big tall green bars in there that you see. And then look at all the max green bop and green bop for the past month and a half. And you can see that it's very nice. And that's what I'm looking for on the bottom part. But I'm looking for the price to be near the 52-week high, and then the 200 to be below the 50, and then the price to be above the 50. And then if it's close to an old high, has that beautiful max green bop on the bottom, that is a go. One of our best longs right now is KONG. This is an example, but it wasn't perfect. I'm going to go ahead and get rid of the triangle. Here was our first long back here in April. We now have a 65% gain. People that are long from whenever I went long need to look to be taking profits here. However, I want you to notice the accumulation in the middle window and that the volume. This move right here, we sold into, but it was a great breakout. Let's say that this price would have been near it had more of a round pattern instead of this like ascending hard uptrend that it has. If it would have had more of a roundish pattern and then broke out, and this handle would have been more round. The max green bop on the breakout also with the huge volume and this price move would have been what you're looking for. And let's pretend like this would have been max green bop from January to now. Then I would have bought some here instead of taking profits on it. But if we can get more charts that look like this, except for let's say that this is a flat base and then you get a breakout, fresh breakout, not a profit-taking breakout. I'm looking for these kind of chart patterns that have all this green bop and all this huge volume and have this excellent price pattern. Whenever we get these in some of our longs, and they're fresh breakouts and not extended like this arithmetic chart especially shows you. It shows you the uptrend that it's on. It's not this line basically trends up, and it should be flat to down for it to be a good breakout. You can't buy a breakout that comes from an ascending trend line. But that's the kind of charts I'm looking for. When I get more of these and whenever I get the proper setups, I'll be getting fully margin long. But right now, we're just going to be safe with our longs. Let's take a look at some of the metals. Platinum still looks fine. Hold on to the support. Silver holding on to its uptrend above the 50-day moving average. And then gold, which is the most bullish of them all, very bullish intraday move, was down at one point. 957, down almost 20 points intraday at one point. Raleigh back to only finished down 4. Very bullish tail, as you can see, and as of course the weekly shows, very bullish reverse head and shoulder, very round bases that it's coming out of. Overall, there's nothing to be upset about if you're a gold bull. It looks very good, especially with that head and shoulder reversal pattern. And then take that on top of the United States dollar head and shoulders top breakdown of the trend line, and you got a lot of reason to be long gold. However, still, my eyes are really for these kind of charts right here. I'm really wanting these kind of longs right now. We're in a nice uptrend. Things look bullish. I'm not going to fight the trend. Today's breakout is very, very much a big tell. We're going to either have to reverse today's breakout on huge volume or slowly roll over for me not to like the market. I'm not extremely bullish because, like I said, go study my 2002 and 2003 longs. Do you see those chart patterns anywhere right now? No. When I get them, I'll be going fully long, and then I expect to get the returns that I got in 2002 and 2003. If you're not familiar with it, you need to go study my past big winners. You need to look at what stocks look like in 2002 and 2003 as they rounded out and broke out on max green bop, huge accumulation and beautiful price patterns. And you'll see we will get these bases if this trend is real. But the market should have to do some more backing and filling, I would figure, with the 250-day moving average coming towards each other. I assume that they're going to probably dance around there for a little while. But the trend of the market is right now having the up 3.45% days, and whenever it's down, the worst it can get is like down 2% now. It's been nothing but up since the March lows, and I can't change that. And NASDAQ is up, I believe, like right around 35 to 40% since then. So there's no point in fighting the market, even with the NASDAQ showing some lower accumulation on the recent uptrend. The funny thing is that that distribution's been even lower. So you can see the sell-off the day before, the higher volume today. Overall, there's not a whole lot to add. I'm bullish, as you can tell, because the trend is up. When the trend turns down, I'll think about getting bearish again. But as I told you this weekend, after scanning 5,000 charts, they all told me that the market wanted to go higher, and look at what you did today. If you don't believe me, look at my recent Twitter post, and also go to Seeking Alpha and look at my stock talk. Look at what I posted before the opening bell today. I told you that I went through 5,000 charts and that my bias is to the upside because the charts looked bullish and looked very round. Still, the way the indexes are acting, though, it might be a while before we can unleash the power. So it might be a while before we get too many more Kongs that set up above the 50-day moving average and 200-day moving average like it did in April. But to get the max green bop charts and the huge accumulation, then get fresh breakouts, it's going to probably take a little while, and market's going to be in a better position. Okay, I'm going to go and wrap it up there. Aloha.